Hi, good evening. You are joining with the third edition of Vantage Point, a program that is dedicated to encourage and educate our viewers in investing in the local capital market. Now, if you do remember, in our last program, with the participation of Dr. Nandalal Veerasinghe, the Deputy Governor of Central Bank of Sri Lanka, we discussed about some of the key contemporary concerns governing the Sri Lanka's macroeconomic environment. Of course, you all know that the macroeconomic performance of a country is related to the performance of the capital market. Now, in our last week's last program, we discussed about the effectiveness of the policy actions that are taken in 2012, and we also looked at the current economic growth and, of course, interest rate environment, inflation, and the way forward, how the government intends to achieve its target, economic as well as other targets going forward. Now, we have decided to focus this week's edition of Vantage Point on local capital market, that is to look at the past, present and the future outlook of the local capital market. So before we commence the program today, I need to introduce the speaker panel for today's program. We have, of course, our key resource personnel, Mr. Chamikara Gunawardena, the founder of Investor Eye, the pioneering independent bilingual investment research firm in Sri Lanka. We also have a very special guest attending our today's program as well. That is Professor Harindra Disabandara from University of Sri Jayawardhanapura. He was also the former Director General of Securities and Exchange Commission in Sri Lanka. He has over 18 years of experience in the academic field, and he also have over 13 years of experience in both local and foreign capital market industry. So I would like to welcome you both to this program. Yes, now of course, starting off today's program, as I mentioned to you earlier, we will be focusing on the Sri Lanka's capital market performance. And on that note, I want to first of all look at the past performance of the Sri Lankan capital market. Now, we observed that the market grow at about 100% in both years 2009 and 10 during the post-war era, and it reached its peak at 7,800 in February 2011. And subsequently, it started to decline. And of course, our CSE underperformed in both years 2011 and 12. Now, as a capital market, interested party in the capital market industry in Sri Lanka, I would like to direct my first question to Mr. Gunawardena. Now, did the market crash, as everyone thought, in 2011? And in fact, what factors affected the decline in CSE in these 2 years?
Let me first tell you this, Ashani. Sri Lanka's capital market cannot be isolated from the rest of the world, just like any other global capital market, for the simple reason that there is significant foreign investor participation in this country. So when there is foreign investor participation, which means when they invest in a market, they look at comparatively with other markets, how attractive those markets are. So what we saw in 2000, the pickup, the growth in 2009 and 10, the excellent performance, on average 100% for both years. It is not the performance that was unique only to Sri Lanka. Of course, Sri Lankan market topped the list among the top of the best performing markets in the world during those 2 years, at least were among the best performing markets.
Yeah, I think it was recorded as the best performing market
at one point of time. Yes, at one point of time. And so what in 2009 and 2010, both years, most of the global markets performed well, except a few markets. So in 2011, almost all markets came down, including Sri Lanka. Sri Lanka saw around 7% drop in 2011.
So as you are saying, the decline in 2011 is not only unique to Sri Lankan capital market.
Absolutely, it was not just unique to Sri Lanka capital market. It was common to most of the global markets in 2011. But in 2012, the drop in Colombo Stock Exchange was unique. Most of the markets went up during 2012. So let's look at the 2011 performance and 2012 performance separately. If you look at 2011 performance, what we saw was a market correction because market was heated during that time. It was trading at P multiples of close to 30 times. For a market like Sri Lanka, I do not think it should trade at 30 times. Maximum, I would say it could trade around 20 to 25 times if the economy is performing extremely, that is above 8% growth. That is the maximum, and also provided that the investment sentiment globally and locally is positive. That's what happened during 2009 and 2011 globally in the capital markets. But in 2012, I mean, let me come back to 2011. It was one thing, it was a correction and it was bound to happen, but regulator, the Securities and Exchange Commission also played a part in the fall of the market, in the sense they had to do that because some of the market participants, some of the broking companies were talking up the market even from a very heated level of 7,800 level in 2011 February. So SEC had to intervene and bring some stability, bring some balance to the market from that level, because otherwise what would have happened was many of the innocent and uneducated, unsuspecting investors would have further lost. Of course, they already lost during that period, if not for the intervention by the regulator. So in 2012, what we saw was the government came in and they had to bring in some balance to the economy, because economy was performing extremely well and it was more or less overheating at that moment, because we were clocking somewhere like 8% growth each quarter during that period. Because
and I think in our last program also Dr. Nandalal Veerasinghe explained this, why the government
Absolutely.
had to take these policy actions.
Yes, absolutely. Government had to come in and take certain policy actions, both monetary policy tightening as well as fiscal policy tightening. Monetary policy tightening in the form of interest rates increasing, as well as exchange rate devaluation. From the fiscal policy side, they tighten the fiscal policy by raising certain taxes and also raising electricity and fuel prices during those periods. So my point here is that fall in the market is one thing and fall or weakening of the investment sentiment is one thing. A fall in the market should not necessarily be due to a weakening of the investor sentiment, because there is a natural correction. Even if the investor sentiment is positive, still the market could come down, because investor.
That's what happened in 2011.
Absolutely.
As you are explaining.
2011. Yes, 2011. Because investors could feel, even though they are positive about the economy and the stock market, they might be, this is overvalued at this point of time, we should exit and we should come in at a later time. So that's what happened in 2011. In 2012, because of the government monetary and fiscal policy tightening, of course, that affected the investor sentiment, and
of course the high interest rate environment, like
absolutely.
In Sri Lanka.
When the interest rate rise, the government raises the interest. Obviously, that has an a direct impact on the stock market. So that's, but mind you, I mean, if you compare 2009-10, especially immediate post-war period, 2009 and 10, the economic fundamentals have not changed much from if you compare at that time and now. I mean, you look at the foreign investor participation. So if the economic fundamentals have changed a lot since then we would not have seen 39 billion foreign inflow, rupees 39 billion foreign inflow in 2012. And even this year we have already seen 15 billion foreign investment inflow. So it is not exactly due to fundamentals, weakening of the fundamentals of the economy. The fundamentals of the economy has not changed much since the war ended in 2009. It is just that there are certain people, certain types of people who try to create a panic, who try to create certain rumors about the economy is in bad health, the capital market is not doing well. I think as the regulator is already doing excellent job trying to educate the people, and stock exchange, and it's not just stock exchange, even broker community should interfere, should try to play a major role, trying to influence and trying to educate the investors about the true situation in the country. It's not just trying to promote high risky stocks. I mean, they have to be educated, and they have to make sure that investors make their investment decisions with knowing what risk and what returns they could expect.
Right. So, as you are saying, all the market participants, especially intermediaries, have a responsibility to educate investors and also to attract new investors into the market.
Absolutely, absolutely.
Right.
So, they have to play a major role, especially broker communities should play a major role trying to restore the confidence that was lost during 2011 and 12.
Right. I believe that's very clear. So, I also want to put forward the same question to Professor Disa Bandara. In your opinion, why did the CSE decline in 2011 and 12?
Now, it's very clear, Shani, 2009 and 2010, we had excellent performance. Now, this is natural subsequent to a 30-year break. Throughout the 30-year period, actually we didn't have a capital market, I must say, because it was very unattractive, and at the same time there was no interest with the investing community, especially just brokers. They had offices, just they tried to just survive in the market. That is what happened. The subsequent to the war, peace was there, lot of hope, and luckily, thanks to people those who have contributed to stop the war, we had economic conditions like lower interest rates, low unemployment issues, low inflation during 2009 and 10.
Growth accommodative policies adopted
Yes.
by the government.
Now, this is a very good and very healthy environment for investments. So, even in the capital market, especially the issuer side, companies, they had a lot of plans to enhance or to start new business, and there were some people waiting in the queue to come into the capital market, and that is why we had some important fundraising companies in our market. So, anyway, as Chamika explained very correctly, subsequent to say 2009, end of 2009, we could see there were about 200,000 newcomers in the market, whether they all are not active, but new accounts more than 200,000, I think. Now, because of this, those are kind of newcomers without having proper understanding. They didn't have previous experience, market experience, and as he said, there were some key players in the market, attractive and active players. Their intention was to seek for quick money. Their intention was that. So, speculators. And at the same time, there were some people. Now, when you don't have proper understanding, what you have to do is just follow the steps of others. So, now with this, some people, without knowing, right, they just followed the step of others. What happened was, they don't have financial plan, they don't have specific target, they don't have understanding about what is return and what is risk. So, especially risk part they have forgotten. So, as a result of this, they had to face lot of unpleasant experiences. However, after 2009, this trend was facilitated by broker credit. So, in Sri Lanka at that time, if you can remember, you had enough broker credit. So without having any cent, sometimes you can go for any kind of investment, to large investments even. So with this, when the participants are speculative, their mindset is towards speculation, high profits, quick buck, then you get not your money, not hard-earned money, just borrow some amount, just bid for prices. So it was like a game, right? So there's a link between broker credit and speculation now.
Right. I think right now we are discussing about the factors that affected the decline in CSC. And of course, Professor Disabandar is explaining to us the impact of broker credit. But of course, we'll be taking that after a short commercial break. Hi, welcome back. Now, before the break, we were discussing about the factors that affected the decline in CSC in 2011 and 12. And of course, Professor Disabandar was bringing out one area, broker credit, before we went off for a break. So, Professor, perhaps you can elaborate on this?
Yeah, now with this, the broker credit and speculation, there's a link. Now, we continue this these two elements together, and for about 3-4 months. Now with this, we could understand basically what is the age for the capital market now, just 1 or 2 years time. Now when someone disturbs the market in a artificial way, then again this break the momentum. So everyone in the capital market was waiting and observing the development, no one was there to give a proper solution. So the regulators, other people, they discussed a lot of things. But anyway, there were price bans and credit restrictions and the like. I'm not going to discuss those things in detail. But what happened was, unfortunately, there was a bubble. This bubble started somewhere in 2010, early 2010. And it was there till mid 2012. It's a kind of bubble. So this started somewhere when the all share price index was somewhere around 4,800, and subsequent to the bubble, and we reached 7,800 and came back to 4,800. So bubble is over now, I think. Anyway, I can't accept one point which you have mentioned a little while ago, that is the crash in the market. So we can't see any crash. If we were in a crash, I believe we should be in a lower position than now, because during 2009, soon after the war, we were somewhere around 2030. All share price index was 2030. In 2012, the all share price index was somewhere 4,800 something. So still in a better position, but not like in the era 2 years ago. I think this is a correction, as Chamikara pointed out. It's a kind of correction, and now we are reaching the realistic figures, right? Now any market this can happen, because people were waiting for 30 years. There's a lot of pressure, lot of hopes. So with this, there can be unusual trends, and there will be people, those who are willing for quick money. So they will utilize the unfamiliarized people in order to gain their benefit. That also can be there. That will be there for any in any market. So,
and I believe it's the responsibility of the investor also when they're investing money
Yeah.
to make sure that they have the investment know-how,
Yeah.
or at least they have the proper guidance.
Yeah.
Because you cannot depend, when you are investing your money, you cannot depend on someone else.
actually, Asani, that is what I wanted to emphasize. So, what happened was these followers, about 200,000 people came subsequent to the war. They didn't have proper understanding, proper education, right? So, this is what is expected. This is what is we need, especially when you transact, when you do any investment in the capital market, you need to understand the risk, because equity investments are risky, they're very risky. But if you know the way you have to handle the investment, it is not a big issue. It is not rocket science actually, right? So, with this, I would like to conclude my answer. There was something abnormal, and it is normal because of the break we had, 30-year break. So, now we have a market, we can have our own hopes, aspiration, expectation, whatever. So, everyone in the capital market should be responsible, because it's for me it's like a sacred place. Everyone must be ethical. Everyone should respect integrity in the market. So, we all are in the business of protecting the integrity in the market. So, that is number one. Discipline is number one. Integrity is number one. So, these are very important pillars of the capital market.
Let me add to what Professor said on the risk side. It is not always necessary, or it is not always needed that an investor has to take a high risk to earn a high return, not necessarily. I mean, there were fantastic examples even in the Colombo Stock Exchange, where people, I don't want to mention stocks specifically now, there were very fundamentally strong stocks that could not come down so much with respect to the market, but only could go up from the price level that was there at that time, because for a number of reasons.
Yes, so I believe that's very clear, the factors that affected the decline in CSE in 2011 and 12. Of course, one main point that was raised here is that the decline in 2011 was primarily because of the overheated nature of the market, and of course it was bound to come down. And then again, I mean, there were other factors that affect the market sentiments, such as a few regulatory actions, few intermediary actions, and few invest actions. And in 2012, the tightening policy measures, interest rates, all affected also affected the performance of the capital market. Now, Professor, I would like to go to, a related question. That is, what other factors do you see affecting the development of the capital market?
Yes. Now, most of the time, some people just look at a prevailing issue or prevailing problem. So, that will be sometimes not the problem, but a symptom. So, if you treat the symptoms, we forget the problem. So, what I want to emphasize is this: in any capital market, for me, and you all might agree, there are 4 elements, components. The number one for me in the capital market, investors. Number 2, issuers, the listed entities. Then intermediaries and market institutions. You know, we can identify some important issues with relating to each and every element. So, one by one I would like to explain. If you take investors, in Sri Lanka, now we have around 700,000 series accounts in the Colombo Stock Exchange. The population is 20 million, out of that 18 years to 65 years, the effective investors, age period generally, we have about 14 million. So, this is just 5% of the population. So, this entire 700,000 is not active. Therefore, if you look at the active
That means
part,
out of the
700,000.
700,000, not all are active as well.
not active at all. So, I do not know whether you believe, only 11,200, around 11,200 people are active. That means one transaction per week, only 11,200 people. Then if you take another aspect, only 64,000 people are active in the market. They have only one transaction for the whole year. Now, if you take the effective participation, it is less than 0.5%.
That is out of the 700,000.
700,000. So, this is the frequency of trading. So, we should understand this. So, there is a big issue. This may be due to lack of awareness, then lack of proper familiarization projects, maybe fear, or sometimes confidence issues likewise. So, we should understand this problem and we have to address this.
Right. We need to go for another short commercial break. We'll be right back. Hi, welcome back. You are joining with Vantage Point, and before the break, we were discussing about the factors that are affecting the development of the local capital market. And of course, Professor was explaining to us about the investor, the market participant investor's role in this regard. Professor, you can elaborate on this.
And that was the number of participants active in the market. And number two is lack of liquidity for institutional and big buyers, big players. Now, in Sri Lankan market, if a big investor, say maybe institutional investor, approach this country, he will buy quite a significant amount in the market. But following day, he should be able to sell this if he wants. Now, is there a possibility? So, that is another important issue in the Sri Lankan market. Now, we have to address this liquidity matter.
And also, I think because of the liquidity being low, if a big transaction is happening in the market, it tends to move the entire market. It has an effect on the performance of the entire market.
Definitely, it is very sensitive. It is very sensitive, and for this we have to have liquidity measures. We have to think about the minimum public float, and we need to have new issues, new shares in the market, new products in the market. And secondly, I would like to emphasize the same product in a different way, this low financial literacy. This low financial literacy is very, very important, because most of the retail investors, I am referring to those people, because these retail people are very important as far as the liveliness is concerned. For you to have a lively market, there should be transaction in all corners. So, these people should understand the return, the expectation, and the risk level as well. For that, we have to have island-wide proper education system. Even I think it should start from the schools. So, if you take the countries like Thailand, Taiwan, they have capital market education from year one. Sometimes you do not believe it is there. Okay. So, I think it is high time for us to consider all those aspects. And finally, I will take as far as the investors concerned, with regard to this retail people, there must be unit trust industry, where you can, even household people, just housewives, those people should be able to invest very easily. But in Sri Lanka, rural level people, they are not in a position to approach unit trust. So, we have to develop that area. And the next most important area is issuers, that is listed companies. In Sri Lanka, there are about 40,000 companies, but listed only 287 companies. This is less than 1%. So, a lot of potential. So, we should understand this. But why they are not in the market? One thing is, most of the family owned businesses, they don't like. Sometimes they have wrong fear or myths. So, they should understand they will not lose the ownership. Even in you can list 10%, 20%, 30%, not the entire thing, right? And next important area is poor confidence in the primary market. So, first you have to come to the primary market. No? Then primary market, once again, even for corporates, possible corporations to be listed, potential companies, they are not educated. So, there must be a mechanism for us to educate them, attract them in a proper way.
And also I mean the point that you are mentioning throughout this discussion is that the lack of investment know-how and lack of understanding about the capital market is one major factor that is hindering the development.
Initially I was talking about the know-how, yes,
investors.
Now the
issuers.
And final factor I can mention under issuers, that is poor investor relations. So, every company, so in other countries I think you are well aware of these things, every company they have an investor relations division, right? Whatever the information you need, whatever the problem you have, right, they have this information.
And even if you go to a website of a company, you see investor relations tab at least.
So, I think not only the listing entities, but also other counterparts, brokers must encourage them. Regulator and the Colombo Stock Exchange must help them. No need to have special regulation, but there must be a system, culture to give information, right? And next element is intermediaries. Especially I will be talking about brokers and the investment banks. So, brokers, now their business is to facilitate transaction. Now, now the tendency or the trend is towards providing broker credits to do their business. Now, because of this anyway, if you properly analyze the Sri Lankan setup, you will see there is no new cash in, right? The existing cash, it's a rolling
liquidity is being rolled on.
Roll on. It is not a very good symptom. So, brokers and other people must get together, and they also must encourage other people to move towards the capital market of Sri Lanka.
I believe many believe that the attracting new investors is the responsibility of the regulator or the authoritative bodies of the capital market, but that is in fact incorrect, because I mean say they have of course they are there to observe, but they have less participation in the capital market. So, the main intermediaries, investors and issuers have a big responsibility in this.
Yes. And one more element is less number of market research reports. I think it's less than 10, right? How many brokers we have? 28.
And it's inconsistent as well.
So, we have to have proper research reports, and they should be, should not be biased, right? Should not be limited to some of the hearsay information, right? There must be proper analysis first. Based on the analysis, you should have recommendations. And it is our duty to look into these minimum requirements of these research reports.
Absolutely.
Right. Then only investor can understand the real decision, right? Real facts based. And finally, with regard to intermediaries, the role of investment banks. Now, I don't know. My understanding is low visibility of listing. So, in the pipeline we can't see any listing at the moment, right? This is again, as I said, yes, potential listed companies. We should attract them. This is not only the regulator, not only the Colombo Stock Exchange. We must encourage other people to come in, and at the same time, they should be understand the purpose of stock exchange. The purpose is to, the capital creation, right? We need more capital in the market. So, it's a venue for you to enhance your capital. And last element is market institutions. They are, I mean the SEC and CSE. They also have a role in the capital market, especially in our Sri Lankan market. We don't have a sound RMS, risk management system. So, it should be a linked product, and at any given time we should be able to see the risk level in the market. So, it's a main thing, because then sometimes what happens is, most of the, not only in Sri Lanka, even in Bangladesh it happens, when there is any issue in the regulatory matter or system, especially in a system like RMS for example, you try to fill the gap using regulation. It is wrong. So, what you can do is, if the problem is with the system, improve the system, right. So, this is one of the areas.
Right. I believe, of course, Professor clearly explained the role of all market participants in making, in developing the local capital market, and of course, we did not want to highlight any area or any issue, any party. It's just that we at Vantage Point believe that this is a responsibility of all market participants. And of course, Professor clearly explained in this regard. Now, before we close off today's program, just within few minutes, just within 1 minute or so, I want you to explain your opinion about how optimistic are you about the future outlook of the capital market as an avenue for capital formation and investment opportunity?
Yes, I am very positive, because now at the moment we are a $50 billion economy. We thought of moving towards 110, 120 billion economy. So, my estimation is this: for this you need about 400 billion for the next 10 years, right. For this, what we can do is, we should facilitate through the capital market at least 25 to 30%. This is about $100 billion, right. So, we should finance through the capital market. So, we should understand, as all stakeholders within the capital market should understand the importance of capital market now. So, if we can find out necessary capital, so that is the role of capital formation in the Colombo Stock Exchange. Now, basically, if I pinpoint, in addition to the so far we had equity, and so far we had 287 companies. Beyond that, we can have corporate debt, we can have warrants in the market, we can have derivatives, various other products, financial products in the market. At the same time, we can look at two angles. So, one is PPPs, private public partnerships. So, through that, no need to go for foreign loans, no need to go for bank loans. So, we as the people of Sri Lanka, we can contribute by investing on shares, maybe shares, maybe anything else. Through this, government and the public entities can get together and form a device, that is public-private partnerships. The second one is, most of the time people think listing is only for big people. Big people means large companies. That is wrong. Now, the world trend is the capital formation for SMEs, right. If you take KOSPI in Korea, it is very clear that they have this SME board, right. I think India also considering this. So, and a lot of conferences on SME listing. So, now we can facilitate most of the entrepreneurs in Sri Lanka. So, they can use the capital market, Sri Lankan capital market, in order to find their capital. Capital formation is, I think that is another angle. So, SMEs will be a very important area for them to find their required capital.
Right. Of course, Professor clearly explained how positive is the future outlook of the capital market and the ways we can improve the factors, the issues that we discussed earlier, the ways we can improve them, and of course the potential in the local capital market as an encouraging factor for our new investors and even our current investors. Unfortunately, that's all the time we have for today. So recapping our program briefly, we started off looking at what happened in 2011 and 12, why the CSE declined, and of course some other factors, along with remedial actions. I mean, as I explained earlier, we did not discuss any issue, any factor in order to highlight any party or any area. It is merely on the objective of identifying these areas and rectifying them so that we can move forward. And of course, we looked at in how positive the future outlook of the capital market as well on the last session. So before we wrap up our program for today, I would like to extend my special thanks to Professor Disa Bandara for spending his valuable time today, despite his busy schedule. Thank you very much, sir. Yes, I would also like to thank our resource personnel, Mr. Gunawardana, for participating in this program and sharing his views on this program. Well, as I said, that's all the time we have for today. So let's meet again in a fortnight at the same time on Sunday at 9:30 p.m. on Vantage Point. Good night.